2009, it pushed mortgage rates, the average rate, below 5% for the first time on a 30-year fixed mortgage. And that's it. There's no other time in history when they've ever been below 5%. In fact, the period of time when they were above 5%, if you look at that average of all time, the average mortgage rate is over 7% average from 1971 forward. And there was a point in time between 1980 and 1983
exactly
that the average mortgage rate was over 18%.
Which was also another.
Interest rates were almost dead set at 6% for a mortgage. Now, the 30-year mortgage really didn't become common until the very, very late 60s and into like 70, 71. It became more standardized. Bigger and bigger banks got involved in buying mortgages. And that's what led us to the 30-year fixed mortgage being the standard, because most people in the 50s and 60s were custom building. And when I say custom building, I mean they were hiring a builder, and the builder had a floor plan. He'd pick one of the few floor plans that he would build in that suburb. He would build it. That's why you get all of these tract homes.
Right.
There was also a huge program at the USDA, United States Department of Agriculture, funded in suburban areas outside of cities that allowed builders to borrow money at almost no interest, and they had really incredible payment terms, and they could just build lots and lots of houses and sell them to people.
Because they were trying to match supply and demand at that point in time.
Yep, supply. I mean, and it kept house prices reasonably affordable because most people were paying cash or very heavy cash. They weren't taking out very big mortgages, or they were using credit unions.
Right.
Yeah. So over time, that changed, and it did make mortgages far more affordable for people doing a 30-year mortgage. And we're even talking now about, to make it affordable, maybe end up with 40-year mortgages. But that's another show.
Yeah.
So historically, the point I'm getting at is this, is the interest rates, we had a great interest rate period of time where interest rates were fantastic when the Fed was injecting lots of money into the mortgage industry by buying mortgage-backed securities from really big banks. Yeah, it's going to widen bigger than that. It's going to be higher.
Well, so far we saw the historic high. Well, we saw one in 09, was 2.9.
Yep. And
then we saw one again around 2020, which, going back to what we said, and I'm taking this here from the CEO of Fannie Mae, upward pressure on mortgage rates.
Upward pressure on mortgage rates. But guess what? Perfect storm for us out here in the real estate world is that we have, our inventory is really low nationwide.
Still true.
It's coming up, but people are realizing that prices are not going down. They're not going up as fast as they were, but They're still going up.